Hello. How we doing tonight, guys? How'd the trading go today for those of you guys trading? Small audience on this Thursday night. I'm doing awesome, as always, Justin. You guys may notice over the next few days, I'm going to start to regain my voice a little bit. I was sick for a while, as I said yesterday, but starting to feel better now. Can I get a quick check, making sure you guys can see my screen? Awesome. All right, I'm very happy because we'll get to showcase a little bit more of our newest indicator, and I got the final confirmation. It will not be taken down, so feel free to go ahead and put it into your favorites at any point. We need a little more boosts. We went from 250 to 110 to now 28 because every time the publication got taken down for understandable reasons, but it is what it is. On that note, let's get straight into it. Sorry, I'm seeing Stan type, but Nat being in the stage, which is kind of funny. But what did we say we wanted to see yesterday? Well, as I said, I was looking for the respect of this specific gap, right? So I was looking for upside pricing. And as we can see from today's range, we did get that upside, but we also got, after this almost 3% move up, right? 553 handles, we had from the high of day to the close of the day a 248 handle retracement, and we'll see once we go lower in the time frames, we actually had pretty much a 300 handle move that lower after making high of day. So we formed both extremes and then decided to go for a very aggressive retracement. That will lead us into something I don't usually do, right? We usually go from the daily. We have our plan. We were looking for longs. And then, of course, after taking out previous day high, could have possibly looked at taking some shorts. It's kind of hard to notice here, but if I zoom in a little bit, you'll see we did take out previous day high. After taking this key objective, you could be looking for shorts. Cool. We always go down to the 15-minute now, but I want to spend some time in the hourly. And let me set up this indicator very quickly. Just show our last 4 historical sessions so we can see the whole week. As you can see right here, this is Friday and Sunday's open. And I will actually remove the midnight open for now so we can just, well, even the daily open. All I want is the vertical separators so you can see someone utilizing them. Why do I go in the 1 hour? Because that is my entry time frame, right? As some of you might know from watching my model video, I use very specific time frames for very specific purposes. The 1 hour being, I want to look at the weekly development. And if we look right here to the right, we can see our weekly candle using 2 degrees power of 3 indicator. And what can we see, right, from this point on? And I will adjust the other one as well, just so we can have a comparison with ES to look for SMT. But what we see is that early on during the week in our hourly time frame, we formed SMT with previous week's high, right? So already that is a possible high of week candidate. From that point on, I understand there is news on Tuesday, and there is also news on Thursday and Friday. So I will frame my expansion to be Thursday as well as Friday. Now this leaves us with only 2 possibilities of weekly profiles. The classic week, whether that's a classic buy week or classic sell week, or the Thursday reversal. For a classic week, I need to see the high of the week formed during the first 2 days of the week. So for example, this would be considered a high of week, right? It is a potential candidate. And then I need to see us form the low of week on Thursday/Friday, right? At the end of the week, with our expansion being mainly during the middle of the week. But whenever you see a Thursday reversal, also framed as a consolidation reversal, right? And more specifically, if I draw my boxes, I always draw them kind of randomly. We're talking about consolidation here. But we consolidated after Monday formed a temporary high for the week. We consolidated into manipulation, and now I frame this upside move as distribution. Of course, tomorrow we'll frame this. I'm not using this as a midweek analysis. I'm not saying that tomorrow we will go up, but that is what I am specifically looking for. But forming SMT on the highs here is definitely not the best. If we concentrate on what happened today, we gapped down pretty aggressively, right? We had NVIDIA earnings, which basically had very good news yesterday. I don't know if you guys follow with that type of stuff. Thankfully, Kane did share some of that knowledge with me today. But NVIDIA earnings just basically had a product be late, right? And they had that announcement. So everything dumped. Everybody was feeling off about that. But actually, the product is on pace and super great. So, of course, we had our bullish upsides. These big companies that have these earnings really do affect the index that regroups these companies, right? Especially when we are talking about NVIDIA, we are looking at tech. But enough about fundamentals, enough about all that. Let's look at price, right? Gap down, we filled that gap and then just decided to expand very aggressively into our draw that was very clear, which were our relative equal highs above. Let me just mark it out as it is. Our equal highs above, which I do believe we went like a handle or two away. I am going to look. So as you can see here, the price 19694.25. If we look at the high of this candle, 19693.5. So 3 ticks away from that objective. Of course, we did take out previous day high right here. And so we'll look at it when we look at the specific setup for sure. But if we look to the right at this candle, we did take out this objective previous day high. And of course, the highs to the left on ES, forming SMT to the downside, which then framed this retracement opportunity. Just wanted to go at length about what happened. But truth is, you are within your daily inefficiency. You are looking for longs. After longs are complete and we have taken our key objective, you could consider a retracement. But as I always say, I like to concentrate on distribution, not the retracement after the distribution. This is where we'll go down to a 15-minute chart. I will keep this line, but I want to actually frame it. I'm just going to remove the equal highs. As we know, we barely did not go for it. Well, actually, you know what? Let's leave them there because I do have something I want to showcase. Previous day high. Make that smaller. And yes, I do understand on this time frame, you will have great difficulty seeing it. But don't worry about that for now. If we look and let's just chill out here and remove our historical sessions. By the way, if you were wondering, the reason why there is now a counter is because if I put 0 historical sessions, but I want my levels to be plotted, then it will only plot the current levels, right? The most recent levels. But if I add 1 session, then it's going to show me the last 2 recent levels. So historical mode on with sessions set to 0 will leave you only seeing the day's levels, in case you were wondering. As you can see right here, New York Open was already pretty much 60% of the way there, right? We can even check if we utilize our premium and discount. You can see almost, I would say, pretty close to 70%, right? This is 50. Okay, yeah, 60% of the way to the objective. That does not mean I cannot look for a trade, but it does mean it is extremely lower probability than if I was here trying to look for longs, right? The area I wanted to look for longs was the daily inefficiency. We gapped below, filled it, and then respect it, continuation to the upside. Well, just the fact that we are so far above means it's lower probability. For me, that means taking half risk positions. So anytime I have a large overnight range, and by that, I don't have a specific number, right? This is something I want to implement in the Rice Statistics app, but for now, I don't have a specific number. I just look at on the average daily range. If on open, I already have a daily range of, what was it? 376 handles. I understand that most of the time there won't be a lot of room to play, but we did do a percent to the upside, 200 handles, and then did a 350 handle retracement. So definitely had the room to grow, but I trade probabilities, and the probabilities were that we were not gonna have such a big range. What do we see in the 15-minute? Nothing, because what did we do? All we did was expand to the upside all day. And if we look at New York Open also, we had already reached, I was going to say retched, I'm sorry. We had already reached our low-hanging fruit objective, which would have been the first inefficiency and premium of this range. This high into this fair value gap, this would have been my low-hanging fruit objective, but we reached this, traded lower to then start expanding higher. And as you can see at the open, might be a little hard to see on the 15, so we'll drop down to the 1 minute here just to see it. But if you look at New York Open right here at this point, there is SMT, not the best, if I can say that like that. But if we look at this level, I'll actually zoom in so it's a little easier to see. If we look at these swing points, this is too far. I want to see 927. It is lower on ES. Sorry, I was looking for my template. Lower on ES, higher on NQ. You have SMT. Now, what do we need more for setup? Right? As we said, our draw was higher. We are within our higher time frame point of interest. Of course, at this point, you are now expanding past it. But as we explained, it is tolerable in these conditions. What do you do at 930 open? Judah swing lower, but that's actually your entry. Right? If we look at this wrong candle, sorry, this very specific candle, what do we see? Well, we traded above this high, which formed the breaker. Now, yes, I could also utilize, let me just mark this out as a market structure shift. We could also utilize this range, right? We have a swing low to a swing high that then got manipulated and later displaced throughout. So you do have your breaker here, just in case you didn't like the one on top, but I'm always going to use the one that's clearer to me. And in this case, I would have used this full range with this SMT, which pretty much means that this whole range is my breaker range, and hence what I want to utilize for standard deviations. I will also plot the small standard deviations, but as you'll see in a second, whenever we have this small of standard deviations, of course we're going to hit them. Right? This is too much of a small fractal for me to take any sort of conclusions off of this. But when I'm referring to this, I'm actually looking at a 5-minute breaker block that was formed through SMT. Right? If we look right here, you'll see that this is a breaker block after we took out this and traded back above. We have a breaker right here. If we go back down to the 1 minute and just analyze, it's very simple, right? I believe it was last week that we saw pretty much the same thing. 930 open gave you the entry. As I always say, right? I don't like to enter right at 930 because of possible volatility. But in this case, we had already confirmed my structure, right? So what I needed to see was not anything other than the respect of this inversion fair value gap. I always say I look for confirmation, pretty much invalidating offside PD arrays when I look for an entry and I don't want to take the unicorn, which in this case would be this overlapping fair value gap after forming the breaker, of course, above and at this level below. I'm tired of seeing blue, blue, blue. I make templates, might as well use them. So we have our breaker blocks right here, and I'm actually going to remove this one, keep it simple for you guys, but these are breaker block standard deviations just of our intermediate time frame breaker, which is the 5-minute. If we look right here, I wanted to see the respect of this inversion fair value gap right here. That would confirm my entry. So from the moment that 930 closes, right, this candle closes and this candle opens, I'm in this trade because I have seen that at 930 we formed our Judah swing respecting this inefficiency. And of course on ES we did not respect it, but ES is my weaker asset, right? ES formed the lower low while NASDAQ formed a higher high. What does that tell me? Well, it's okay that ES does not respect it. I expect it to disrespect that level. Why? Because it's a weaker asset. Right? You have to utilize SMT in everything you do. This is why I love divergence so much. It gives you a lot of insight into what price is doing and what price is doing, why price is doing this. So technically, your entry would be at this open or probably get slipped out through it. Now, for just consistency's sake, and if I was backtesting this setup, I would put my entry right at 930 and at this fair value gap. This is what I utilize to enter. I just wait for the confirmation of respecting this inversion fair value gap, meaning I wait for the candle close. Since we are at 9:30, very volatile times, I want to get an additional confirmation, but you get that. Now you have inversion fair value gap, and order block also with SMT below. That is an absolute perfect stop loss placement. And as you can see, just targeting 2 standard deviations would have given you, what, 3 minutes? If we look at entering right at 9:30, it would have taken you 5 minutes to get to your objective, which would have offered 3.9 R. This was the only setup I would consider in terms of longs, because anything after, you're just late. And if we actually deep dive into what happened here, right, all we see is uncorrelation, right? I'm forgetting the exact word for it, but basically what I'm trying to say is that they are not correlated, ESN and Q. And as we know, this is one of the conditions that we look for and explain as low probability. If ESN and Q aren't doing the same thing, then something is going wrong and I don't want to be a part of the market. But if you had taken your profits at your partial, right, and since as I said, right, when we were looking at a 15-minute range, our low-hanging fruit has already been taken, so I'm going to utilize standard deviations as objective. Even if, here, let's be conservative. Even if you targeted one standard deviation, that was 3-minute take profit, 2.19 R. Once you have that objective met, dude, I'm break even right here. This is now my stop loss. And from that point on, I'm just holding my runner. If you're on a smaller account, right? Maybe I would suggest playing micros so you have more room to take profit. But at this point, I'm taking out half my position. I'm taking out 25% here, and then I have 25% left to play with. At this point, maybe I'm happy with my results, or, well, I mean, at 7.34 R, I hope you're happy with your results. If we're talking about my model, right? That is a great setup. The average is usually 4.1 realized R is the average for the Rise model, or at least my performance with the Rise model. But if we look above, right, 4 standard deviations, clear objective. But if we're heading to 4 standard deviations, I'm going to expect it to give me that extra 16 handles to get to equal highs. So taking profits here is not very realistic. But after we induce these highs and then retrace back, then somewhere in this area, right, that we are retracing aggressively, I would have taken profits, definitely. But at that point, as I said, it's purely speculation. You're holding your runner. You take profit when you're happy with it or when it reaches your final objective, which at this point, as we can see, well, more specifically on ES, right, at this point, we took out previous day high. So technically, my take profit would have been at the 10 a.m. open. If we do look, and if some of you framed shorts at the 10 a.m. open, right, we had a beautiful open high. We also had SMT very far, but we had a swing point. I don't know if it is this one specifically, somewhere in here. Yeah, probably this one, which as you can see at 10 a.m. is unmitigated by ES. So we had SMT. I was looking at it on a 15-minute time frame, if you guys are curious. We had SMT. We did a clear open high. Then we flipped the open, confirming an open high, and then you could have seen an expansion towards the downside, targeting these failure swings, which would have given you a nice short retracement. And if we go look on our 15-minute, at this point, it is this retracement into our 15-minute fair value gap. But I would much rather you consider taking the long continuation entry. And yes, it is lower probability, but there is still a continuation entry to be formed here. There was SMT with YM. As I said, I don't really utilize that type of SMT, but there were entries after forming the breaker block right here. As you can see, we broke above. Well, we closed above. So you had to anticipate the breaker block, closed above, retrace into your unicorn. Here, I'll actually showcase it if I'm going to be talking about it. Close above their unicorn, fair value gap, inversion fair value gap, order block, 3 PDRA stop loss rule, targeting previous liquidity, and of course, relative equal highs above and previous day high, which I'm just going to lower a tiny bit so we can see the results here. But yes, if you targeted the equal highs, you would have been 3 ticks away and would have probably closed your position somewhere here. Well, at least you really should have, because when we induce like this, especially after already being equal highs, then inducing in the morning and re-inducing without taking out that level, that scares me. But as we can see, there was SMT, so your objective was indeed hit. Now this is a continuation entry that is possible, but the truth is you missed out on your first entry, so you're following up. If you're considering shorts here, there are lower time frame breakers at this point, or if we look at ES, technically you could frame this as a breaker range. Truth is, you had to go down to the 30-second or even the 15-second to be considering taking this short, right? From this breaker, unicorn, 30-second unicorn. But do you really want to be trading the 100 handle move when you actually just missed out on a 200 handle move and have the further opportunity in the day, right? No. Truth is, I always want to align myself with distribution, and that distribution today was to the upside. Now, I still want to look at actually a failed setup that was brought to me by Dylan today. I don't see him in here. It's probably wrong times for him because I don't see him often in here. But today in chat, we talked about the lunch raid, right? And I always talk about the lunch raid. I'm actually going to leave this here. He'd just be lazy as fuck. Well, fair enough. I'm still going to go over it because it was actually a great opportunity. And I want to showcase, because if you've actually read the thread about intraday draws on liquidity, right, which is logic brought by ICT, I just prefer to name it intraday draw on liquidity than the name of the YouTube video in which he shared it, which is One Trading Setup for Life. We look at intraday draws on liquidity. This is actually pissing me off, so let me just hide that. If we look at this, what we are looking for is the range formed during the lunch, right? So we're looking at the highest high and the lowest low during lunch. Now you want one side of that range to be taken offside with your bias. So if I'm bullish, I want to see the lows get taken out. And if I'm bearish, I want to see the highs get swept, to then have your setup form, and your objective will be the other extremity of that framework. So as you can see from this simple drawing, if I just remove the previous day high so we can see something, you swept the lows, so now your objective would be the highs. But this setup failed, right? And as I told you guys, my bias was bullish. But the reason why I would have never considered that is for the same reason why I said that the opportunities were done. We took out previous day high and we formed SMT. These equal highs right here, there is SMT. Yes, 3 ticks differentiate that SMT, right? That level getting mitigated or not. But who cares? We don't have rules about SMT needing to be of a certain distance, a certain divergence. This actually gives me an idea for the upcoming database for the Rise Statistics Early Access group. So that is pretty fun. Let me just take a note of that so I don't forget that idea. Let's just say divergence handle size. Always random times to get ideas like this. Divergence size in handles. Awesome. Sorry about that, guys. I just have to note down stuff. If not, I will forget it. But as I said, you had no vision to frame longs until some sort of retracement occurred. Now, what is my intraday time frame? The 15-minute, right? I always say it. 15-minute is my intraday. What is our current daily range? Well, fuck me, right? 500 and something handles. Okay, well, I am going to look at this, and I'm going to look for us to retrace to my first discount in efficiency. Now, in this case, it is this 15-minute order block. Just like I say about the daily, right? When I have an extremely, I'm going to remove actually, sorry, the daily inefficiency because I can't see anything. All right, whenever I have an extremely small range, pretty much on the daily, I go to the 4-hour, but the opposite can be said as well. Whenever I have an extremely large 4-hour range, I would go up to the daily. So in this case, in my 15-minute, I will go up to my 30-minute, and I will even expand all the way up to an hour to have a clearer inefficiency to target due to the size of this range. Now you could also refer to the 4-hour. I like to stay in the intermediate time frames to be more precise, because as you can see in the 4-hour, there is no discount in efficiency, because that to me is at equilibrium. So to be more precise with my specific mechanical logic, I will be in the 1-hour. And as you can see, I could not consider longs until this retracement objective has been met due to the SMT above and us taking out a key objective, previous day high, key liquidity level with, of course, again, SMT. If I just plot the retracement objective on ES, right, in the same time frame, just looking at the hourly, this was actually at equilibrium, right? If we look, this is slightly in premium. Well, we would be looking at this specific gap. These gaps being respected, I'm looking at NASDAQ. I believe we gapped lower. Yes, we actually opened lower and actually closed just below it. So it did not even get respected, which would invalidate any possible longs. But if we just look, it was just a power hour retracement right here after making the lows around 1248. Well, technically 312, we had a little retracement to the upside. Well, little for the current day, which was 116 handles. Basically, I would not be considering longs at any point until this objective has been met, explained through the logic I just shared. And once we are already there, we just ran, 356 handles to the downside. After running 500 handles to the upside, this is not high probability at all, right? And because of that, I would have never taken this trade. I just wanted to showcase the reasoning behind what I'm looking for intraday, right? It's like, okay, I had an upside move. Now I can clearly tell we are heading for a retracement due to the fact we have SMT after taking out a key level in price. When SMT forms at key levels in price, it gives me insight. Okay, well, we're going to retrace into our range. What is our current range? Let's find my first discount in efficiency, because that will be, if I'm bullish, that will be my retracement objective. And we tapped into that. And once our retracement is done, I can then consider longs. And now you can tell me, would you have considered a PM short? Hell no. Why? Because the truth is, an entry would have been during lunch, and I don't trade during lunch because I have not found it quite as profitable as it would need to be with my specific model, the Rise model. Now, there was a lot of information shared. Are there any questions about the logic we just shared, or possibly the setups that we looked at for the day? Just resetting my settings here. I guess not. Pretty clear today. Glad to see some faces joining in along the way. If you're new, thank you for being here and welcome. All right, guys. Well, no questions. I'll leave it at that. You guys have a great trading day tomorrow. We'll be here tomorrow night once again for another price action review. I wish you all luck, and I wish y'all a great night or day wherever you are from.